So I'm saying the volatility that we're seeing on the market scene is slightly overdone, even though pressures within the Eurozone remain serious and offer no quick resolutions at this stage. What's your view? How are you reading the market activity that we're seeing on a global scale?
Well, nothing falls in a straight line, Alishia. So we saw a very aggressive pullback in all of the markets over the last week or so, and we saw Anglos at new lows. We saw a lot of the stocks coming back nearly 10% from their highs, and I think it's just a consolidation phase right now. We start to see the markets picking up slightly, even though there is concerns in the European economy about Portugal, Spain, Greece, etc. But I think that we have to consolidate and wait for more news to come out on a fundamental level.
Is that what's driving the resources segment up? Because some would say that coming as a surprise, given the fact that we've been hearing that it's risky to be buying into risky assets right now, and of course with the outlook on precious commodities still being very uncertain.
Well, if you take a look at some of the companies, we saw bulletins saying that they're going to come out with better than expected results this morning in Australia. And we saw that Xstrata have just reinstated their dividend, and they expect the commodities going forward to look looking very good. So from the company side, the big miners are seeing some upside, and they're starting to see that their revenues will be coming back. So on that side, I think it's very positive. Although obviously with the Eurozone under so much pressure, there is negativity there, and people don't want another collapse in the system again. But on a company level, some of the companies are starting to show good signs that they are starting to recover. And bulletin this morning, again, as I said, looking forward to a positive and better than expected earnings. So the commodity side, people are coming back. We saw Anglo's off its low yesterday at around the 270s, now trading back into the mid 285. So there is definitely investment buying coming in at these levels.
Well, a big part of the X factor centres around Portugal, Greece, Spain as well. Now the EU is slated to hold a summit this week, Thursday, and many expecting the organisation to fail to offer detailed plans on how to actually deal with the fiscal crisis that presents itself in those territories. What are some of your expectations there?
Well, they can't have a shock to the system, so I think they're going to need probably another stimulus package for that Eurozone, especially for Greece, and they're going to have quite strict controls by the sound of things on how Greece can get back in and be able to pay those debts. They can't afford a crash to the system, and that will really put us into a definitely long-term deflationary environment where that Eurozone will just take many years to recover. So I think it's quite important and how they come across with the solution for that Euro problem in Greece, Portugal and Spain, and it looks like also into Ireland. Very important, but I think it will be quite conservative, but definitely direct.
In the meantime, we've got many companies making news in terms of the activity they're involved in at the moment. We've heard in the news that investment banks are preparing Life Healthcare, which is one of South Africa's biggest private hospital operators, for a public listing this year. I mean, to what extent is this reflective of some of the optimism that is out there at the moment, despite the global context within which we're operating?
I think in an environment when things have been so difficult, you do start to find companies that are managed very well and have come through with flying colours in very difficult situations. When you do find those companies, you want to take them and move them forward and grow them. And I think that Life is one of those examples, a very big private health care company, and they're looking to expand and to grow. So there is definitely opportunities for companies, especially if they've come through a very difficult last 16 to 18 months. And you would start to see listings come through of the better managed private companies that are looking to expand, and they're taking also all of the weak companies that start to fall off the market. You'll see some consolidation there, some M&A activity coming through as well, and then you'll start to see listings from there on. So it is quite positive, and it does show that we are seeing a bottom of the recession.
Well, on the M&A activity front, I mean, we've got Adcock, Ingram also in the healthcare space making headlines, saying that Baxter Healthcare may buy a 51% stake in Adcock's critical care unit. Market reaction to that news?
I'll just come through relatively soon. I haven't had a lot of time to look at that, but another positive sign in the market. For Adcock, I think that they also specialise in a lot of generics as well, and maybe that helps alleviate some of the specialised services that they need to do there in that section of their business.
Let's bring it a little bit closer to home for you. Nedbank and Imperial Holdings announced approval has been received for the bank's acquisition of Imperial Banks. Let's look at what this move actually spells for Nedbank moving forward. We know that the market had pretty much been expecting this since the end of last year.
Yes, I did go through last year and it was announced last year that Nedbank would be taking over that Imperial Bank, the rest of Imperial Bank. I think that Imperial wants to really maintain and focus on its core vehicle business and leasing business, where the bank wants to take on the financing side of it and the vehicle finance side, which is also core to Nedbank. So I just think that both of them would rather take what they're doing as their core and move forward from there rather than doing a little bit of both. So I think it's good for both companies and really good for Imperial.
So that's some of the activity, Rob, that's playing out now on the market scene. Just looking forward, I mean, what are your expectations out of the mining sector? Because we know that the mining sector has managed to issue bonds late last year. They've managed to raise, players within that space managed to raise $30 billion, meaning that they do have cash available for acquisitions and prompting some kind of activity along those lines further down the line. What are your expectations there?
I think so. I think that financing is relatively cheap again. We've got very low interest rates. Once all of the noise has gone out of the market and the recession seems to have slowed down, the companies are sitting with a little bit of cash. There's a lot of consolidation that can happen in the environment of the mining. A lot of the junior miners that are under a lot of pressure with cash will be taken over. And I think that later in the year, if this recovery continues later in the year, we'll start to see some M&A activity in the general mining sector.
All of this spelling what for in terms of jobs outlook, in your opinion, moving forward? Because we've seen today that South Africa's official jobless rate slipped to 24.3% of the labour force in the fourth quarter of 2009, and that only a mild improvement from what we saw in the third quarter.
I think unemployment around the world is a problem. We saw that when we had some bad numbers a week or so out of America, that the American market took a bit of a shudder as those unemployment and jobless figures were higher than expected. I think the economies around the world will only show really good recovery once that unemployment rate starts to diminish. It was good that our unemployment did come down. It shows that even though over the Christmas period there was some employment coming through, and as long as that trend continues, it is positive for South Africa and the sign of the ends of a recession.